Hi everybody, welcome back to Dividend Stockpile, where we talk about all things dividend and income investing related. In today's video, we're going to have a little bit of fun. We're talking about my 52-week investing challenge. So let's go. Alright, so in today's video, we're going to talk about what a 52-week investing challenge is, why am I personally doing it, which investments am I buying, and how much I'm investing each week. So to start off, a 52-week investing challenge is a way to invest a set dollar amount or set number of shares on a weekly basis. It allows you to do a consistent dollar-cost averaging approach to your investments into the same investments week after week, no matter what the market is doing. And it allows you to grow your position over time as you have available funds, and you don't have to worry about what the market is doing. The market could go up, the market could go down, but you know that every week you're going to buy these particular companies or funds. So why am I personally doing it? Well, if you follow my videos, you know that I love to do an annual list of investments or annual focus list. And so it allows you to focus on specific companies and funds, which I'm going to be doing myself. I picked 5 different ETFs and companies that I'm going to be my primary focus for 2025. And I'm going to challenge myself to have enough funds to invest in these 5 companies and ETFs every single Friday. It allows me to do all my research now and understand what I'm going to buy throughout the year, so I don't have to worry every single week about, oh no, what's the best value today, or what am I going to focus my money on, or anything like that. I'm just putting the money in automatically, dollar cost averaging, and over time it's going to work out. I want to build up these positions anyways, and I'm a firm believer of not being able to time the market, so let's just add a little bit every single week and not worry about it. Remember, this is long-term money anyways, so what's the difference? And to be honest, it's fun. There's a huge community over on X, formerly known as Twitter, where a lot of people do these 52-week challenges. So it's great to see what everyone else is doing and motivate each other, and to have that accountability partner with the community saying, yes, I did complete my 52-week challenge. So you can also do it with your friends, but I do it on Twitter. So if you haven't followed me on X/Twitter, definitely reach out. I'd love to talk to you there as well. Okay, so let's talk about which investments I plan on buying for 2025. First up is GE Vernova, ticker GEV. It's one of my favorite companies, and I did a recent video on why I feel like it's my #1 conviction for 2025. So I'm not going to go into a lot of the details on the company today. You can check out that other video, which I'm linking here on the page right now. All right, so the second is my #1 holding, and my favorite investment is the Schwab US Dividend Equity ETF, or SCHD. Third is the iShares Top 20 US Stock ETF, ticker TOPT. Now, this is a relatively new fund from iShares, so we'll talk about what that's all involved with. My fourth one is the iShares Bitcoin Trust ETF, or IBIT. And last but not least, number 5 is the NEOS Bitcoin High Income ETF, ticker BTCI. All right, so here we are for our first company is GE Vernova, ticker GEV. What they are is they are a manufacturer of the equipment for electrification around the world. They have a global presence in traditional and renewable energy sources, things like wind turbines, gas turbines, solar, grid modernization. They do a lot of things. One of the most impressive parts is 25% of the world's electricity generation is done through a GE Vernova system. So that's quite impressive when you think about the volume of electricity that's generated globally, and GE Vernova supplies the equipment that provides 25% of the global output. Scrolling down through their website, it talks about the 25% that they generate. They do that through gas turbines, around 7,000 of them installed, wind turbines, over 55,000. And the thing that I'm most excited about is their services business. So in addition to selling the equipment itself, they also supply the maintenance and upkeep of those systems, but they also provide the technology. So they have applications and grid modernization technology and things like that they're using for their clients to provide more efficient use of the electricity that is generated through their products. And so that's going to be a great driver of their revenue and their profit over time. Going over to Seeking Alpha, one of the best resources for research onto different stocks, I want to talk about a couple things. So the growth is what's quite impressive. Now remember, GEV has only been a public company for about 9 months. It was a spinoff from GE earlier in 2024. But their revenue growth is already very good at 12.09 over the last 9 months or so. But what's most impressive is the long-term growth outlook. So this is analyst estimates for the next 3 to 5 years, is they're expecting the earnings per share to grow at a 29% rate over the next 3 to 5 years. So that's more than a double of their earnings over the next 3 to 5 years. So that's quite impressive. They're also paying a dividend now. They just initiated the dividend a few weeks ago. Right now, it's an annual payout of $1 per share. So the yield is quite low. But one of the things that they mentioned in their December session with investors is that they plan on sharing 1/3 of the free cash flow generation from GEV is going to go back to shareholders through dividends and share repurchases. So looking at the profitability part of the GE Vernova, you can scroll down and see how much cash they're generating, and that's what's going to be used to pay that dividend and to do the share repurchases. Already they're at $3.59 billion in cash from operations, and that's only going to grow over time as their earnings per share increases and their scale increases. That number is just going to keep going up. And remember, 1/3 of that is going to come back to shareholders through share buybacks and dividends. So it's a very exciting time to be a holder of this company, and that's why I'm going to be investing a little bit of money every single week going forward. Now, the stock itself has gone up quite a lot over the last couple months, so it is not exactly cheap right now, but the long-term growth of the company I do find very attractive, so I'm going to continue to buy in over time. The second one I'm going to be investing in, and if you follow me for any length of time, you know that I love SCHD, the Schwab US Dividend Equity ETF. It's currently my largest individual holding at about 25% of my account, but because it's such a good product, I'm going to continue to add to it every single week going forward. So if you have not heard about SCHD, which I'm sure most dividend investors have, it's a fund that tracks the Dow Jones US Dividend 100. So they pick approximately 100 stocks based on certain criteria that they determine, and they invest over those particular companies. What's really great about SCHD and why people love it is up until about 2 years ago, it met or beat the S&P 500, but it also provides a great dividend and excellent dividend growth. So switching back over to Seeking Alpha, looking at the dividend scorecard, you can see that the current yield is 3.64%, and the 5-year dividend growth rate is almost 12%. So having that combination of 3 to 3.5 to 4% current yield, plus 11 to 12% dividend increase every year, is going to really increase your income over time for long-term investors. So even though SCHD's had a relatively weak year compared to the S&P 500, the long-term trend of this ETF, as well as the dividends and dividend growth that is presented, makes it one of the best dividend ETFs out there, and I look forward to continuing to have this as one of my largest holdings. All right, next up is a relatively new ETF. It's from iShares. It's the iShares Top 20 US Stocks ETF. And just like the name implies, what this ETF holds is the top 20 stocks in the S&P 500. So you're going to get the exposure to the biggest names and the most quality names here in the United States, all in an ETF wrapper that you don't have to think about. Switching over to their product sheet, it shows that you're just one trade away from investing in 20 of the largest, most successful U.S. companies. The market cap of all of them is $23 trillion, and they operate in over 160 different countries. So these are the types of names that you would expect from a ticker like TOPT. You have your Mag 7, your Apples, your Microsofts, NVIDIAs, and so on. But you also have the other top 20 names in the S&P 500. So Berkshire Hathaway, Visa, ExxonMobil, Costco, Johnson & Johnson, all the names that you would want to invest in anyways, and that you probably use on a daily or weekly basis, are in this ETF. And why I picked this one over something like VOO or the S&P 500 is that a lot of times the S&P 500 companies aren't always the greatest. Even though the 500 biggest, some are struggling. But the top 20 really isolates the top quality, highest market cap companies. They're the ones that have been growing over time and will likely to continue to grow. So by focusing a little bit more on the top 20, I feel like I'm giving myself a better chance for the growth. They do pay a small dividend, but the main purpose of this particular ETF is the growth over time. Next up, we have IBIT, the iShares Bitcoin Trust ETF from iShares. So as the name implies, this particular ETF holds Bitcoin. And, IBIT does not pay a dividend right now, but it's a small portion of my portfolio that I'm looking for growth. I don't know what Bitcoin's going to do in the future, but if it goes up over time, I would like to have a little percentage in it. So this is a very small holding in my account, but I do plan on adding to it over time. And because Bitcoin is so volatile, I plan on just averaging in over time and see what happens. Looking at the fact sheet, you can see that basically it gives you access to Bitcoin without having to have your own wallet or own separate account. They do pay they do charge a small fee for this service, just like most ETFs do. But for the first 12 months, the fee is waived to only 0.12% of the assets you have. So it's quite a small fee to get the exposure to one of the largest Bitcoin ETFs in the world. All right, so the next one up and the final one is BTCI, the NEOS Bitcoin High Income ETF. And while this might sound similar to IBIT that we just talked about a second ago, their strategy is completely different. So this is run by NEOS, and NEOS is known for their option strategies. So what they do is they purchase Bitcoin futures ETFs, and then they do covered calls on a portion of the portfolio to generate high income. And because Bitcoin futures are so volatile, the amount of premium that they can receive from their options is quite significant. So you're looking at a very high dividend yield or distribution yield on this particular ETF. So it gives you some exposure to Bitcoins through the Bitcoin futures, but it also provides high monthly income generation for those who are income investors. So this is a great balance between being involved in Bitcoin and the future potential Bitcoin, as well as getting income today from your investment. So looking at Seeking Alpha, you can see that the fund has only been around for about 2 months now, but so far the returns have been quite significant. It has had a little bit of a pullback over the last couple of weeks, so this might be a good time to get in. But the way I'm approaching is that I'm just going to buy it every single week and average out over time and collect those great distributions that they're known for. Scrolling back to the NEOS product, you can see that the month to date and since inception has been very good, and the distribution rate is amazing. So because, as I said before, you have the volatility of Bitcoin and the Bitcoin futures, they're able to use that volatility to our benefit and provide high income. So the annual distribution rate as of right now is about 27.6%, or about 2.3% on a monthly basis. So overall, that's a great distribution if you're looking for high income, but still have exposure to the Bitcoin space. All right, and so the next part of the presentation is just basically how much I'm going to be investing. And as of right now, I'm looking to invest about $400 a week into these investments, with the breakdown being as follows. For SCHD, the goal is to invest 3 shares a week. Now, obviously, the price of SCHD will go up and down, so it might vary week to week, but 3 shares a week is my goal for this project. For TOPT, I plan on buying $100 a week. BTCI, also $100 a week. IBIT, I plan on buying 1 share a week. And for GEV, I plan on buying $50 a week. So on average, that comes down to a little bit under $400 for the week, and I plan on doing that for every week going forward through the end of 2025. Okay, hopefully you enjoyed that overview of the different companies and funds I plan on purchasing for 2025. As a recap, here they are again: GE Vernova, Schwab US Dividend Equity ETF, the iShares Top 20 US Stocks ETF, the iShares Bitcoin Trust ETF, and the NEOS Bitcoin High Income ETF. Now, are you doing a 52-week investing challenge? If so, put a comment down below about which stocks or funds you're planning on buying this upcoming year. And while you're here, appreciate you making it all the way to the end of the video. Check out this next video while you're here. And remember, always keep stockpiling those dividends.